I think that the Bitcoin ETFs are not for crypto people, they're for their parents. But
Yeah.
their parents have a trillion times more money than them. So I was actually looking at, there's $157 trillion in wealth in the United States. The boomers and the silver generation have like 102 trillion of the 157. So they have the vast majority of all the money. And so even if a tiny, tiny sliver of that is like, yeah, I heard my kids talking about it, or I don't want to kick myself in 10 years if this thing does go crazy, even if I don't understand it.
It's been a most exciting couple of days for Bitcoin and cryptocurrency investors, with most top cryptocurrencies posting significant daily and weekly gains, and Bitcoin getting closer to smashing its 2021 all-time highs. Barely 2 days ago, the industry was celebrating Bitcoin smashing $57,000, its highest price since December 2021. Today, the leading cryptocurrency is trading at around $63,000 after briefly hitting $64,000 on Wednesday. This upward trend is supported by recent record inflows and trading volumes from BlackRock and other Bitcoin ETFs, which now hold over 300,000 Bitcoin and have broken their inflows and trading volume records twice this week. Despite the craziness of the past few days, senior Bloomberg ETF analyst Eric Balchunas says there's more to come. According to the Bloomberg analyst, there is so much pent-up demand for these ETFs from wealthy investors that control over $100 trillion in investment wealth. Eric reckons a majority of these investors are looking to invest at least 1% of their wealth into Bitcoin through the Bitcoin ETFs, which translates into at least hundreds of billions of dollars for Bitcoin and spot Bitcoin ETFs. The senior Bloomberg ETF analyst discusses his outlook in his latest interview with Thinking Crypto's Tony Edwards. During the interview, Eric delves into how the Bitcoin ETFs compare to and soundly trump past ETF launches, including the GLD. He also discusses the possibility of spot Ethereum ETF approval in 2024 and how such products would impact the largest altcoin's price. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
There's been big launches, and there's been really highly publicized launches. When gold launched, GLD, that was a big deal. And I'd say that was the only equivalent to this. Because they're like, for example, remember, Dave Portnoy launched that ETF Buzz, and he had all the marketing. That thing, I think it traded 400 million on the first day, which is an insane amount for an indie small ETF. I mean, he really got to give him credit for getting that many people excited. But like Bitcoin ETFs did billions. They've already surpassed. If you just look at like the first month or the first 6 weeks, we're about week 7, I think. If you stack them up on any measurement, they blow everything away. At this point, you could probably find something in there like, oh, if we look at the first 2 weeks and we X out GBTC technically, and we adjust for inflation, technically the GLD actually was tied. Like there are ways to maybe find a spot in the 7 weeks where it wasn't earth-shattering. But if you go 1 week, 1 day, 4 weeks, 6 weeks, 7 weeks, you look at volume, assets, flows, post GBTC, extra, whatever you want to do, you're going to find they blow away every other new launch record. It's getting to the point now, and I just told you that I'm looking at the most ETFs traded.
Right.
This is out of 3,400. IBIT is 7th. This is right up there with SPY, QQQ, IWM. These things have been around for 25 years.
Right.
This thing's 7 weeks old. I've never seen an ETF go right up to the top 10 like that in this sort of a time. So, and I think GBTC is in the top 30 and Fidelity is 38. I mean, if you added them together, they'd probably be like the 4th biggest most traded. And if you're the 4th most traded ETF, it puts you around number 8 in terms of all equities. So if you combined all the trading in the Bitcoin ETFs, in fact, I'll do that right now, you're looking at something like, let's say we'll call it trading about as much as Apple.
Wow.
That's a lot, right? So this is volume, and I get it. Some coiners are like, oh, you talk about the volume, but it doesn't necessarily mean the flows are the same. And I get that. Only a portion of volume converts into flows. But you have to understand that ETFs are trading vehicles
Right.
and volume is so important long term. And it's important for bigger fish. If you're an institution, say you're a hedge fund or a prop desk, a trading outfit, or a pension plan, and you want a little crypto Bitcoin exposure, you love the fact that you can put on $100 million trade or a $50 million trade and no one will notice you.
Mm.
That's a big deal. If it doesn't trade a lot, then I was like, I don't want to be half of the assets. I don't want to push the market price. I don't want a hedge fund to see a big fish coming in and try to game me. The more volume there is, the more anonymity these big fish can come in without anybody noticing them. They love that. And so they prioritize liquidity over everything else. So the volume is really good, even though it may get people hyped. Oh, it traded $1 billion. They think, oh, that's going to be $1 billion in assets. It doesn't quite work out like that. Some
Right.
of it will be inflows, but the volume is like if you were fishing for professional institutional traders and they were actual fish in a lake,
Mm.
and you were tasking me what bait to use, I would tell you volume.
Mm.
More
Now,
important than fees, even. Advisors love fees and low fees, but these are already low. So I always tell people if you want full maximum category growth, you need two things: low fees and high volume. And they got both.
On Wednesday, the new 9 Bitcoin ETFs broke their all-time daily volume record for the second time this week. On Monday, Eric reported on X that the ETFs had broken their all-time volume record with $2.4 billion. On Wednesday, just halfway into the trading day, the volume shot up to $2.6 billion, easily breaking the record set on Monday. Here are some of Eric's posts about Wednesday's activities. The first post reads, "Only halfway through trading day, and the new 9 Bitcoin ETFs have already broken their all-time daily volume record with $2.6 billion. We got 4 Bitcoin ETFs in the top 20. BlackRock's IBIT is number 4 overall. It's going to trade more today than in its first 2 weeks combined." In a follow-up post, Eric noted that the trading explosion had spilled into the Bitcoin futures ETFs and Bitcoin-related stocks like MicroStrategy. According to Eric's post, the 2x Bitcoin Strategy ETF smashed its volume record with 3 hours of trading left. BITO and BT Pro shares. Short Strategy Bitcoin ETF were also headed towards breaking previous records, and all 9 Bitcoin ETFs were in the top 100 most active ETFs, totaling over $6.7 billion in trading volume, as against Apple's $4.5 billion. In another post, Eric reported that the ETFs had doubled the volume record set on Monday, with about $6 billion traded. IBIT led with $3.3 billion, and Fidelity came second with $1.4 billion. Both did double their previous volume records. Both also recorded double their previous records for the number of trades, with over 500,000 individual trades between them. With all these amazing feats being recorded 7 weeks after launch, it's no surprise that Eric, who has decades of experience with ETFs, is so floored by how well the Bitcoin ETFs are performing. Let's get back to his interview with Edwards as he speaks further about the Bitcoin ETFs and the possibility of spot Ethereum ETFs approval in 2024.
People know themselves. They even though they love their 60/40 and their Vanguard, they also like sometimes see something happen and they don't want to miss out. And they think they feel with Bitcoin, I don't understand it, or I even think it's a scam. But I don't want to be like feeling like an asshole 20 years down the road when it's $1 million and I could have just put a little in my account. So I think like future FOMO cure is an underrated thing. And the other thing is the idea that there's way less pressure when you're talking about the hot sauce part of your portfolio for a boomer. They're not going all in. They'd put 1%. And like, okay, it flames out. This is not the money that counts. This isn't my beach house. This isn't my kids' money.
Right.
This is just a little flyer on something that just in case it goes up, So there's just a lot less pressure. And if something's volatile and speculative as Bitcoin is, the fact that it's only 1%, you can stomach that volatility much better than if it were the whole thing. The strong hands theory is also part of why people underrated the growth. or the asset potential, in my opinion. But I'll be honest, I even underrated it a little bit. Where we are now, I thought there'd be 10 to 15 billion in flows after the first year. So we're already at 6. So we're essentially halfway to where my middle point is, and it's only been 2 months. I think GLD's first year was like $1.5 billion. So you can see why 10 to 15 is pretty optimistic, but the 6 billion I think is pretty shocking in the first 2 months, or it's not even been 2 months, 7 weeks.
Let's talk Ethereum spot ETF. What are your expectations? Are you expecting an approval this year or possibly 2025?
James is really looking into this now. We have to have an answer because we're getting asked more. I see approval, whether it's the final deadline is in May, and it's BlackRock. BlackRock's big, and Grayscale also has one, and they want to convert. And we're in this deja vu situation. Like, will they sue if they're denied? Does the SEC know this? Will they just approve it not to get sued? A lot of unknowns, but at the end of the day, I'm just going to stick to the eye test. They approved Bitcoin futures. And when they wouldn't approve spot, they got sued, and a court said you have to approve them, basically. So they approved spot. They already approved ETH futures. You do the math. So either they're going to approve them because they don't want to get sued, or they're going to get sued and then approve them. I don't really see any other scenario playing out. And you can't use the securities argument now because they've already approved ETH futures. That's out the window. Sure. So my guess is they approve them just to get the hell off the plate. And after that, there's really nothing down the road because Bitcoin and Ether have futures, which are regulated by CTFC. And that is an important part of the deja vu. Once you get to these other coins, like there's no real frame of reference for them. There's no futures market. So I'm way less optimistic after Ether. Go up. There's an election coming up too, which could mean a new SEC commissioner, which could mean a whole new sort of thing to think about. So those are all variables, but I'm fair.
Approval?
CTFC approved Ether futures, which I guess is them saying it's a commodity.
Okay. I see what you're saying.
Which is part of what's been used against Gensler's comments the whole time. I believe James would be able to really fine tune this, but that's why the approval of ETH futures, not just ETH futures, but the ETH futures ETFs, ipso facto is like him saying it's a commodity, or it's him saying it doesn't matter that it's not a commodity. Either way, the genie's out of the bottle.
On Wednesday, Eric revealed another massive importance of all the hype and large trading volumes for the Bitcoin ETFs. According to the Bloomberg ETF analyst, some deep-pocket investors are about to get in with serious money, which would further move prices and create even more demand. In a post on X, Eric said, "I asked some market makers around, and most say this volume is largely a function of natural demand. Word is wirehouse platforms are seriously looking at adding them soon. I'm sure pressure is mounting for them. They like to see track record and get paid off, but with grassroots demand like this, they're gonna have to expedite." When asked, Eric explained that wirehouses are mega brokers like Morgan Stanley, and they control trillions of dollars in assets. Meanwhile, all of the excitement is making Bitcoin critics like Peter Schiff very salty. On Wednesday, El Salvador President Nayib Bukele revealed that his country has made over 40% profit on its Bitcoin holdings due to the recent price increases. His post reads, "When Bitcoin's market price was low, they wrote literally thousands of articles about our supposed losses. Now that Bitcoin's market price is way up, if we were to sell, we would make a profit of over 40% just from the market purchases. We won't sell, of course, at the end. 1 Bitcoin is equals to 1 Bitcoin." This last part must have infuriated popular gold bug Peter Schiff, who quickly replied to the post. His response reads, "Talk about those profits after you sell and realize them. That is part of the problem. It's all a delusion. What good is a paper Bitcoin fortune if no one can buy anything with it?" Apparently, Peter Schiff still hasn't done his homework, which is a pity considering gold's price has remained almost the same since forever. In his epic reply to Schiff, President Bukele wrote, "Cry harder." What are your thoughts on the video, Eric's interview, and Peter Schiff's relentless clowning? Please drop your comments and observations in the comments section below. We would love to read all the really epic comments. Also, ensure you give this video a thumbs up, subscribe to our channel, and check out our other videos. Thanks for watching.